Hey, what's going on everybody, this is Gary. In this video I'm going to share with you why I'm buying back Clover again. In fact, pre-market I bought Clover again and I'm planning to buy Clover Core once the market opens, and I'm going to share with you the rationale why later on. But before I continue, I'm going to make a toast to everyone who bought Clover at a later stage. I drink quite a fair bit because I keep repeating the video because a lot of motorcycle around. But cheers! For those of you who joined the party late, do watch the video on my rationale on why Clover can go up again. But of course, we never know. But without further ado, let's go. Right off the bat, let's take a look at the chart, and I'm going to share with you the rationale why I'm buying at $13.87 when pre-market, and I'm going to buy calls when market opens. So we were down 15.25%, price at $14.34. And the first time I posted the video, it was $8, $9 plus, it went up to $11 and then $28.88. It was awesome, and I hope you guys take out your profit, because if you watch the video, I always advocate, you take your profit along the way and you cut your losses as fast as possible. So it went out $28. I was drawing this ascending level of support. I thought it's gonna bounce back here and then we slowly rise up. You get what I mean? So, but it didn't happen. Okay, it didn't happen. It dropped back down, and this was the last straw for me. It went down further. I sold my position at around $19.80 something cents, with huge profit. I mean, huge profit, because and then I thought it bounced back $20. I thought like, oh my god, did I paper hand too early? But then I didn't enter because I want to wait for any confirmation, and then it went down all the way. And then yesterday it went down again to $14, and this is the support line. Let me share with you why I feel this is a good support line. Okay, I would say good, but it is a support line. The previous time it went to $17, it dropped down to this particular area. Okay, and then it bounced back up to the $16 mark. So right now we are at that particular line. So then the question is, what's next, right? What's going to happen next? So let's take a look at 30-minute chart. So in this 30-minute chart, as you can see, the RSI at this particular line, when it went up 100%, it was so overbought, and then it goes up, but then it starts to drop back down again. So right now the RSI is 32, 30, 37 or so. It is pretty average range. It leans toward lower side, but yeah, it leans towards normal to lower side. And then if you take a look at this MACD, okay, this purple line, I'm just gonna make it layman now. This purple line, this orange line, then it crosses. Okay, usually when MACD crosses these two lines, when it crosses, you just gotta exit, all right, because the next thing is gonna happen is gonna drop. That's usually the case. When RSI is too overbought, it's gonna go down. Where MACD crosses the two line crosses, get up. Then right now the MACD dropped down, and as you can see, if you zoom closer, the MACD is slowly meeting. I hope, and meaning if a few more green candles, the MACD crosses. When the MACD crosses, then I don't know, buyers are more bullish when it does. So it usually happens unless it is heavily shorted. So now you take a look at this. Why I'm buying? The RSI and the MACD looks pretty much ready for another run. But in terms of the risk management factor, the maximum loss you're gonna make if it goes down here, right? If it goes down here, I'm fine as long as this is this particular support line. And why I think it might go down? Why? Let's share with you. Stocks works this way. I still don't know why. Alright, but it works this way. Whenever there is this empty gap, chances are it will tend to go back to fill this particular gap. And as you can see, evidently it fills this particular gap before it goes up. I mean, usually the case. So I think it might drop, so I'm gonna enter some position here, okay, and let's see how it goes, because the risk that I'm willing to take is $12 and below. Probably here I'm gonna get up. Okay, this is the risk that I'm willing to take. But the reward that I'm willing to get, the reward I might get from this particular risk would be this. So if you take a look at this, the risk and reward ratio is there, probably even 3:1. So the upside potential is there. So for those of you who actually sold your position at high, or for those of you who haven't entered Clover, I might consider after doing the due diligence. This I'm just sharing you why I'm buying it based on the chart alone. Now let's take a look at another factor. So we are down 15.25% yesterday. We were down, right? And let's take a look at this short sale rule, and basically it has been activated. So what is short sale rule? Okay, so short sale rule, basically in 2010 the SEC adopted alternative uptick rule, which prohibits short selling when a stock has dropped 10% or more. Yesterday we were down more than 10%, so the short sale rule is activated. What is it? Understand, under the short sale rule, shorts could only be placed at a price above the most recent trade. So for example, an uptick in a shares price. Again, an uptick in the shares price. With only limited exception, the rule forbade trading shorts on a downtick in share price. The rule was also known as uptick rule, and this, right? So basically, okay, I'm gonna put this particular link in the description box below. You guys can go and research it out. I strongly encourage you to research and understand what is this particular short sale rule. I'm not gonna go through one by one, right? So this short sale rule, coupled with very potential, right, risk and reward ratio, and the RSI and MACD, it looks a potential for another run. And another thing, now let's take a look at the most shorted stocks on MarketWatch. And right now, as you can see, Clover is still third with 36.6% shorted. That is quite heavily shorted. So yeah, by the way, I bought Workhorse Group and planning to buy this as well, just see how it goes. But anyway, with this, we are still heavily shorted. But I just want to bring your attention to something which I posted the other day about iBorrowDesk. iBorrowDesk has iBorrowDesk show us what's the borrow fee and available. And yesterday, just yesterday, 10 of June, the borrow fee is 116.7%, which is extremely high. But right now it's only 31%. I know you may wonder, hey, is 31% too little to have a short squeeze? And let me share with you. Alright, so just 7th of June, it was 4%, it was 3%, it was 3.5%. So the fact is still 30 something percent, is still quite substantial. So let's take a look at AMC, okay, because all these are momentum stocks, and right now the borrow fee for AMC is 2.5%. The available share is 1.8 million. GameStop. Okay, so let's take a look at GameStop. Okay, so as you can see, for GameStop, it is 0.9%, but the available share is way lower. So you get where I'm coming from. The fact that it's 30 something percent is still considered quite high. Now let's take a look at the Clover community, the Reddit community, right? Let's see how much it has grown in the past couple of days, right? I posted the first video on Sunday or Monday, right? It was at 9,000 and right now it's 23.1 thousand members. That's what I want to say. In terms of growth, we are growing exponentially. In terms of growth, we are growing exponentially, and there are a lot of comments, a lot of posts on Clover, a lot of mention on Clover with regards to will Clover be the next AMC, and a lot of people who are into this kind of short squeeze stuff, like myself, like yourself, and whatever, just want to see if there is something, then it will start to come. So in terms of the growth, I foresee it going higher and higher. So there are a lot of due diligence, and I would like to give credit to this Professor Boy 11, posted 11 hours ago. This particular due diligence, I was actually reading this entire thing. It was quite comprehensive, quite long, but it may bore you guys. So I'm just gonna I'm just gonna, if you guys lazy, I'm just gonna like put it here. You guys can read, or you guys, I'm gonna put the link below. Okay, once you're done, you guys can just unpause it. Okay, so the key takeaways. Okay, I think I can scroll faster lah, because you guys can pause. Yep, especially this part. Then this. Okay. Okay, honestly, I'm being. Okay, you guys get the idea. Huh? So, okay, I hope you guys pause the video, read the entire thing. If not, you guys can go to Reddit. The links will be in the description box below. It was pretty well done, this particular due diligence. So now let's take a look at Twitter. Okay, and in particular, let's take a look at this particular account, which is called okay, basically he's the managing director of Predictive Analytics, S3 Partners LLC financial analytics firm. So what do you say? Squeeze score for AMC, GameStop and Clover is 100 out of 100. 100 out of 100. We changed the metric 1 to 10. Tesla is 23 out of 100. Yeah, so he gave this particular detail. As you can see, 43.26% of float shorted. That is slightly different. It was slightly different as the figure I showed you just now. That's about it for this video. I think I hope you guys enjoy it. It's a pretty short video. Just want to share with you guys why I buy back Clover, and hopefully there will really be a short squeeze. And let's see. Let's hope that I can give a toast with you guys again. If not, I hope you guys enjoyed this particular sharing. It's not a financial advisor. It's not a financial advisor. It's just for entertainment purposes. No, it's more of like I just want to share my findings with you guys, and hopefully if you guys disagree or if you guys agree, just let me know, leave them down in the comment section, and then we can discuss so that all of us can learn together. Yeah, with that, I'll see you guys in the next video. Bye.